that calculates your structure value, right? But structure itself is also in some ways defined by its context. So for example, if I'm looking at this, I know, and this is where we come into that discussion, I can see that there's value to buy this NASDAQ here, because you can see there is a substantial value divergence creeping in. I think that is crystal clear. I think that's crystal clear. But if you don't, what are you going to do about it? Well, you obviously have to try and come up with some structure. So you're trying to find your first main structure and you come up with a level like that. Well, there it is. Now you've got structure. So if you think the market's bullish, and at that stage it very, very definitely is bullish. If you think the market's bullish and you start seeing that structure, then of course now you've got your easy money buy trade, because now you're buying structure as well. You're buying into that structure there. Maybe the Heisman trade or the tipping price trade or a BSG squeeze trade. You're starting to get into that squeeze structure for the buy trade to kick off. So it doesn't matter where you get that trade. It was a very strong structural winner. Very strong structural winner. And obviously the takeaway from that buyer was absolutely fantastic. I mean, that's a $1,000 winner, by the way, guys. $1,000 winner. Not just trying to buy this bottom edge, but a $1,000 winner through that phase. Now, obviously, you lost the value here, but you were already in the buy structure, which might have meant that you were looking for this short sell on a measure. But obviously, as you came into those measurable opportunities, the value had gone back bullish again for the equity revival. So you'd already seen that this structure target was very much still in focus. But when you hit that structure target, this has now made higher highs. So obviously, it wasn't a sell trade. It was simply, let's get some profits out of the way in that area there. And then the extension, we seem to be moving into that measured move, don't we? You see it? So the extension, we moved into a measured move against that structure there. And you can see where the sell came in, can't you? Yes? I'm assuming everybody saw that sell, because that's the measured move against the perfect classroom from yesterday. Does everybody agree with that? That's the 30-second measured move. And there was your measured move sell trade in terms of a guaranteed premium. So everybody can see that that's a guaranteed premium against the US dollar, yes? Paul can see it? One person can see it, okay. I guess we have to do that in classroom again until we get more than one person seeing it. Sell side bonds, how's that turning out? Well, it's doing okay. I've been quite heavily selling this 22 and above at the moment, so I was hoping it was going to start playing out. I did get some pretty big size into that because obviously it was the US cash open, so I'm keen to make sure I take some profits, which might just put a little jam in the bond price in this downtick. So sell side bonds for me was a no-brainer. We'd moved the needle here. You can see obviously there's the structure break in terms of that trade. If I take the structure from there to there, does everybody see why we were selling it? Does everybody see why we were selling it? It's a measured move. You see it? So there's your measured move target price there. That's why we sold the 20s. Into that 22 print, we were heavy selling that. So that's just again straight out of the classroom, guys. No surprises, no changes. The short-term structure was bullish, so I'm not selling that until we reach the measure. So that left that drop there. Then when it broke through here, I was really surprised we got it, but we did. So people starting to learn a little bit, right? So we caught these sellers out the last time here by selling too early before we got the proper structure. We caught them out by buying it and running their stops. Now that's easy to do when the market's trading at 11 o'clock in the morning because there's no volume. So literally I could put 20 contracts in there and it would take out the stops, right? And that's what happened. I mean, literally we only had to put a little bit of buy pressure into that move there to take out these guys' stops here. And then we sold back into the market for that drop, right? We talked about this before. It all happened, by the way, guys, in classrooms. So it was quite a good trade. Now, as it transpires, the next phase, of course, of this leg higher, exactly the same type of thing. These sellers came in way too soon. they haven't got the premiums they need to get that short to work. It did work out okay, actually, so they did not too bad, but obviously it was better when we got the stops out the way. Cleared the stops, and obviously, as I said, I did say it was good. Because we've got size in this, we were going to jam the price. We just did. You can see the prices went, when I told you it was 13s, and it's now trading 17s, 18s. So we gave you a very nice, easy opportunity to make sure you bank some of that money yourself, and before the price started to pop back to the upside.